qualified industrial engineer, Jacob has been with the company for over 20 years. This is Captains of Industry. Richard, thanks very much for your time.
It's a great pleasure.
Have taken over from Alan Fourie, your predecessor, from the beginning of July, and certainly there's much made about the first 100 days of any CEO's position. What are you planning for the first 100 days?
Yeah, Bronwyn, thanks for having me here. It's very exciting to be in office. I've been with the business for 20 years, and most of that time has been coming up through the operation. I've had both manufacturing and sales experience, and I think I would like to carry that through into office, is really that feel for the operation. I have a passion for this business. I've been there 20 years, and I'd really like to carry that enthusiasm through into the business and really get the organization aligned around some seriously important targets.
There has been some speculation in the market that Alan decided to step down given the state of the company and the results, a particularly tough time in 2008. But of course that's in line with generally the financial meltdown we saw between 2007 and 2008. In your opinion, has he had a good 27 years at Hulamin?
Yeah, I mean, Alan carried us through a very tough period. Alan took over as MD of Aluminium in 2002. Right at the start of the commissioning of the initial rolled products expansion project. He carried us through that. He carried us into getting the next rolled products expansion project commissioned and justified and constructed. So he's had a great innings at Hulamin. He's turned the 60 corner, and I think he's deserving of a rest.
What are you going to do now in terms of the share price and unlocking value for shareholders? There are some shareholders beating down your door wanting at least that 12 Rand level on Hulamin's share price. Is it something that keeps you awake at night?
There are some things that keep me awake at night, but not the share price. Our responsibility as management is really to deliver the goods operationally. The shareholders will sort the share price out. We've got a lot of value still in the business, which we can unlock through excellent operational performance. There's so many factors outside our control that determine the share price, the rand dollar, and those kinds of things. So really what we're going to be doing is unlocking value from our existing assets.
Now you've managed to increase volumes and increase your production over the 6-month period, but as you allude to, you've been hit by external factors, one of them being the dollar rand and the extremely strong rand exchange rate. Is there anything that you can do to hedge your business going forward from a stronger rand? It appears from a number of currency strategists that a strong rand is not going to disappear in the short term.
No, look, there's nothing that we can do other than perform operationally, make sure that we're absolutely at the cutting edge of cost containment, operational efficiencies, and do what we can do best. We've got a business model that there's a lot of money that's being invested in the business, and a lot of the volume is still untapped. So we've got a lot of growth still ahead of us, which will unlock additional profits. And the quantum of the additional profitability will be determined by the rand dollar level, not the fact that we will be profitable or not.
So if the dollar rand, for instance, went to 650, and some currency strategists do have that level on their cards, Hulamin still is going to be profitable, in your opinion?
Yeah. Look, obviously there's so many external factors that drive it, local inflation, the cost of oil, the cost of electricity, all those things. But our current calculations is that our break-even is probably somewhere around 6 Rand or below.
Coming back to the opportunities for you to unlock value or to grow the business, what would you say the key business opportunities are for you right now? I know that a tie-up with BHP Billiton has been investigated on some levels within the business. Is that still on the cards?
No, we're not looking at that at all. The real unlocking of value is going to come from the money that we've already invested in the business, but these assets are not yet operationally delivering onto the revenue line. So we've probably got about 60 to 70,000 tons of rolled product still that has to be unlocked out of the business. and that's really what we focused on. And also our business model is focused on increasing the proportion of high value, high selling price products, and there's still quite a journey ahead of us there, and that will unlock a lot of value for the business.
Another external factor impacting your results, headline earnings per share this time around flat on the prior period. The Transnet strike in May hit you hard, and it has obviously resulted in congestion at the ports and impacted exports.
It's been a huge impact. The strike itself was 3 weeks, but the ports have only now recently in the last week or two normalized, and that's had a significant impact on our business. We've continued to produce, and as a consequence we've got this huge pile of finished goods that we haven't been able to dispatch, and as a consequence we've got about 7,000 to 8,000 tons of additional inventory that's on the water and on its way to our customers in all the different parts of the world. As a consequence, we've absorbed quite a lot of cash because we have insisted on keeping the business operating at a normal level. Fortunately, that will then flow back into the business, that cash, as the customers receive their goods and they pay in due course in the second half of this year.
You went about a rights issue of 750 million rand, and that was to enable you to restructure your debt. Mm-hmm. The rights issue was oversubscribed. Can you take me through how you are restructuring your debt and making your balance sheet that much more effective?
Yes, what we've done is we've used the proceeds, the 750 million, to pay off both long and short-term debt. And in addition, we've paid off early some capital repayments that were required over the next 4 years. So we have no more capital repayments until the end of 2013. And as a consequence, that's given us some more headroom in the business. Obviously, the short-term impact of the build-up of inventory has used up some of that, but the business is definitely in a more comfortable position than it was prior to the rights issue.
Earlier when I said to you, does the share price keep you awake? You said no, but there are other things that keep me awake. So I'm going to ask you to elaborate on what does keep you awake at night.
I think cost increases in the local market are very concerning. You know, we've seen a 35% increase in gas prices. We've seen a 22% increase in electricity. Our payroll costs continue to exceed inflation, and that is concerning because it does erode the competitiveness of South African industry. And we really owe it to the country to create jobs and create employment so that we can all grow and all benefit from these incredible raw materials that we have in South Africa. But in the current scenario, manufacturing in South Africa is a really tough place to be.
Are you under pressure from a labour perspective for double-digit wage increases?
Look, we're very fortunate. We've recently settled our 2010 discussions at 7.5%. So while the pressures remain, I think our employees are quite understanding.
And then coming back to the electricity price, recently having spoken to Nick Holland, the CEO of Goldfields, he says one of his major concerns is that he doesn't have a long-term price curve for electricity prices. Is that again something that you are grappling with?
Yeah, no, we've in the last year seen a 22% increase in our felt electricity price. The concern going forward is that doesn't seem to going to abate in the foreseeable future.
In terms of your operating costs, how big a line item is electricity?
We're not as exposed to electricity as some other companies. The majority of our energy costs are actually in the form of gas. We did see a dramatic increase year on year from last year, but gas prices do seem to have stabilized. So while we are exposed, it's not as significant as to the gas prices.
When you say that the manufacturing industry in South Africa is a tough one to operate in, do you think that these headwinds are going to subside?
I find it very difficult to look forward. You know, I can just share with you an example that we ourselves have felt. We're busy with an expansion of our slab casting capacity, and we require 2 melting furnaces. And we went for 6 quotes, 3 South African furnace manufacturers, a Chinese and a German and a French manufacturer of furnaces, and really these are simple, like a big steel box. And surprisingly, or for some not surprisingly, the 3 most expensive quotes we got were from South African manufacturers, which just illustrates the difficulty of cost pressures for manufacturing in South Africa. On an ex-works basis, it was cheaper to buy the furnaces in Europe than it was to have them made in South Africa.
You operate in some 60 countries worldwide. Can you see the difference in competitiveness in those countries when you compare it to South Africa?
Look, I think one of the things that is impacting many developing countries is the outflow of capital from the first world. With interest rates as low as they are in Europe and North America and Japan, people who want to invest money do so in the third world, in the developing world. And as a consequence, the Brazilian currency is done just as strengthened just as much as the rand. So in the countries that we're dealing in, manufacturing is tough in the developing world at the moment. We've seen the Chinese have a little bit of a distortion because they control their currency, but even they are strengthening their currency over the last year or two.
What was the response of the market to your appointment? There are some out there who said that potentially an external candidate was on the cards. Do you feel that that criticism is justified?
Look, I think our business is quite complex. I can testify that the search and the nomination committee really did a very thorough search.
Were you up against external candidates?
I certainly was up against external candidates, and in their evaluation, I think probably the overriding issue was the complexity of our business. I've been there 20 years and I really do have a feel for the business, and I think any external candidate, no matter how good they were, would have had to have a much longer kind of honeymoon period of really getting to know the business. And I think, I'm speculating, but I think that's probably why it swung my way.
And Richard, have there been significant changes in the management team since you have stepped into the office?
Not particularly significant. I have made some changes. Alan Fourie obviously retired. There's 2 other ExCo members who will be leaving. So we have leaned up a bit and tightened up a bit, but really the core team, and it is a very strong team, remains in place.
And what type of people do you surround yourself with?
I've got a broad range of people, both commercial and manufacturing people, but a lot of the Hulamin team have been around for quite some time. So I'm very encouraged by the level of and the value that the people around me are contributing.